See, we are very clear, and I've been vocal about for last many months. We are in decisive bull run in India, but easy phase of bull run is over. So that should be very clear, and hence expectation has to be brought down. That 70-80% return which you have seen year on year for last few months, if that is the expectation, then that is definitely a biggest risk. There will be disappointment. Now, when we talk about from a risk perspective, yes, we have been talking about a mild risk off or the more from a macro perspective. But sector rotation, stock rotation is the best way to manage your risk in the current context. What is very important to understand that since we are all bullish about India, we said this decade belongs to India, maybe half century belongs to India, that India has to be India dedicated structure stories you have to look from a longer term perspective, and where mid and small will qualify. In fact, I will say small will even more qualify. The only thing is that after market has rallied in last 4 years or so, you have to rebalance or rather reassess your risk appetite, reassess your investment horizon. If you have that 5-year, 10 years horizon, let's say minimum 5-year horizon, I think small cap still the best.
Given the last 3-4 years, the kind of returns the equity markets have given, the expectations have just gone through the roof. Those are not realistic. It's not going to repeat every year, year on year. So we need to pare our expectation down. I think that is the single biggest risk the market faces. I'm with Nilesh on this. There is expected to be volatility and we need to ride it out. But just wanted to add one caveat. You know, typically in these kind of forums or anytime we discuss markets, we say markets is equal to equity, equity is equal to risk. You know, markets is also fixed income. And this is a great time to invest your money in fixed income. So there's a lot of money in fixed income, which all of you all have. If you move it towards the medium term to long term bond funds or gilt funds, I think even that's a great place to be. So if you're looking at a up to 3 year, I think that's a great place to park your money in, and for longer periods of time, equity.
People say that, to reduce the risk in the portfolio, reduce your return expectations. But Charlie Munger once said that, there are times in history where you don't diversify for the sake of diversification. You take calculated bets. So to my mind, this is India's time. When I was a youngster, I watched the Cricket World Cup where Imran Khan won the World Cup. And at that time, there was this T-shirt those guys were wearing saying, proud to be a Pakistani. And I felt really bad. And I think in the last decade, as Indians, we are absolutely proud to be Indians. I think it is the animal spirits of collective nation building happening. So for me, risk, you keep the risk on the side, you look at the growth that's possible. And coming to the sectors, Kailash spoke about Bharat. So for me, tier 3 cities, for me, rural India, where post-COVID, the corrections have not been too much. Post-monsoon, there is a lot of spending capacity. So that is where I would look at.